Let's roll the tape back, way back, before EVs were sexy, before Tesla was a household name. Think 1970s. Oil shocks, gas lines stretching for blocks. The U.S. got a wake-up call. We couldn't rely on OPEC forever. Engineers started dreaming of electric cars. Crude prototypes popped up, but they were clunky, slow, laughed off as toys. Fast forward to 1996, General Motors drops the EV1, a sleek little number, 100-mile range. It's a spark. California's pushing zero-emission mandates. The air's thick with smog. This could have been our moment, but it wasn't. Why? Because the system fought back. Oil lobbyists leaned hard. Dealerships hated the low maintenance, and by 1999, GM kills it, crushes every last one, a graveyard of scrapped dreams. Now shift your eyes east. China's watching. They're not big players yet, still churning out cheap toys and textiles, but they're taking notes. They see our hesitation, our bickering, and they start sketching a different playbook, one that doesn't flinch. Jump to 2001. China joins the World Trade Organization, the floodgates open, their factories roar, the China shock hits, 2 million U.S. manufacturing jobs vanish by 2010. Per MIT's David Autor, we're reeling. But they're building, quietly, methodically. 2009's the pivot. Beijing announces a $230 billion bet on new energy vehicles, EVs, hybrids, the works. It's not pocket change, it's a war chest. Subsidies flood in, $15,000 per car at peak, tax breaks, free plates. They're not messing around. By 2015, they've got 500,000 EVs on the road. We're at 350,000, per the IEA. But here's the kicker. They're not just selling cars, they're securing the guts of the industry. Lithium, cobalt, rare earths, the stuff that makes batteries tick. Picture a map, Australia's lithium mines, Congo's cobalt pits, China's red flag planted in everyone. Deals signed with state-backed firms like Sinomine and CMOC by 2025. They refine 70% of the world's lithium, 85% of rare earths. USGS and IEA numbers don't lie. We've got deposits, Nevada, North Carolina, but our mines are choked by red tape, a decade to permit, while China's digging today. Now zoom in, let's talk batteries, because this is where China flips the script. You can't have an EV without a battery. It's the soul of the beast, and China's not content to just make them. They want the whole chain, meat cattle. Contemporary Amperex technology cumbered-lutted. A name you'll hear a lot, they're the kingpin. 37% of the global EV battery market in 2024, per SNE Research. BYD's at 17%, LG's scrambling at 13%, CATL's not a company. It's a machine. Factories sprawling across Guangdong, churning out cells faster than Ford can bolt a chassis. They're in your Tesla Model 3, your Ford Mustang Mach-E, even BMW's i4. 1 in 3 EVs worldwide runs on their juice, per the World Economic Forum. And they're not slowing down. Hungary plant opens this year. Mexico's next, dodging U.S. tariffs like it's a game. While we're stuck, our battery push, SK On in Georgia, LG in Michigan. It's a start, but it's years behind. And guess what? They're still buying Chinese lithium, processed in Chinese refineries, shipped on Chinese terms. Let's paint that picture brighter. Imagine Shenzhen, April 8, 2025. A CATL factory glowing under floodlights, 50,000 workers, conveyor belts spitting out batteries, 100 gigawatt-hours last year alone, enough to power 1.5 million Teslas, now cut to Michigan, GM's Orion Assembly. It's quieter. Workers clocking overtime to hit quotas, but the parts aren't there. Why? Because Trump's tariffs, 10% on all imports since April 5th, 104% on Chinese goods by April 9th, per Bloomberg, jacked up costs. CATL cells that cost $100 per kilowatt-hour last month are $115 now. GM's bleeding $1.2 billion on EVs this quarter, per their latest earnings leak. Ford's worse, $36,000 lost per F-150 Lightning. Reuters dug that up. Tesla's holding. but 40% of their batteries still come from China, per supply chain docs. This isn't a hiccup, it's a chokehold, and China's tightening it. Rewind again, because this didn't sneak up, the U.S. had shots to lead. The 2009 stimulus, $2.4 billion for battery research, Obama's big swing, it birthed Tesla's Gigafactory, but it wasn't enough. China matched that yearly by 2015, $2.5 billion in subsidies alone. Per Carbon Brief, they built scale, we built prototypes. 2022 rolls around, Biden's Inflation Reduction Act drops $369 billion for clean energy, tax credits, $7,500 per EV if it's made here, sounds great, but the fine print kills it. Battery components must be North American by 2026. Problem is, we don't have the mines, the refineries, the capacity. China does. 70% of lithium refining, 60% of cobalt, per IEA. Our startups, QuantumScape, Solid Power, they're bleeding cash. Rivian's stock's down 40% since January, per NASDAQ. Lucid's laying off 18% of staff, AP reported last week. We're innovating, sure, but China's executing. Now, let ES hit the streets. China S roads tell the story. 51% of car sales in July 2024 were EVs or hybrids per CAM charging stations every 10 miles, 2.5 million nationwide per Xinhua, the U.S. We're at 8% EV sales, 170,000 chargers per the DOE. It's not even close. Why? Because China's government isn't debating. They're doing. Mandates, quotas, cash. They've got BYD selling EVs for $12,000. Think Seal sedan, 300-mile range, cheaper than a Corolla. NIO's swapping batteries in 3 minutes. Xpeng's flying drones off car roofs. It's a circus of innovation, and we're watching from the bleachers. Our EVs, $55,273 average price per Kelley Blue Book, up $7,000 from gas cars. Sales are stalling, growth's flat. Why buy when China's flooding Europe, Asia, Latin America with cheap options? 5.5 million vehicles exported last year. Per China Customs, we shipped 1.2 million. They're the top dog now. Japan's out. We're nowhere. Trade's the next layer because this isn't just cars. It's war. 2018, Trump's first tariffs, 25% on steel, 10% on aluminum. China retaliates, soybeans, cars, tit for tat. We thought we'd win, we didn't. They pivoted. EVs became the spear. April 5th, 2025. Trump doubles down, 10% on everything, 104% on China, per Bloomberg, markets crater, Dow's off 1,700 points. April 10th. China hits back, 34% on all U.S. goods. AP confirms, it's chaos, but China's ready. They've got $3.2 trillion in reserves. Per IMF, we're at $243 billion. They can ride this. We can't. U.S. Automakers are screaming. Walmart's facing $3 billion in extra costs, per WSJ. Why? Because China's supply chain is our lifeline, and they're rerouting it. Mexico's auto exports to us jumped 15% last year. Per Commerce, a chunk's Chinese parts, tariff-free via USMCA. Canada's in too. Ontario's shipping batteries south, 20% Chinese-sourced. Per Reuters, it's a bypass we can't block. Picture Detroit, April 8, 2025. Factories that built Mustangs and Camaros, now they're half empty. UAW workers pacing. 1 million auto jobs on the line. Per BLS, tariffs were supposed to save them, but they're strangling them. GM's Orion plant, 50% capacity. Ford's Kentucky line slowing. Why? Because every battery's pricier, every delay's deadlier. China's factories, meanwhile, hum. BYD's Changzhou plant, 1 million cars a year. KATL's Ningde hub, 200 gigawatt hours. They're not sweating tariffs, they're dodging them. Hungary, Mexico, Southeast Asia. CATL's CEO Zhang Yukun said it last month at a Shanghai summit. We go where the market takes us. And it's not here. They're boxing us out. Every shipment rerouted, every deal signed. It's a step ahead. So here we are, April 8th, 2025. The U.S. dreaming of an EV future but waking up to a nightmare. China's not just bypassing us, they're rewriting the map, 51% EV adoption there, 8% here, $12,000 cars there, $55,000 here. They've got the minds, the plants, the will. We've got tariffs, gridlock, and a prayer. This isn't a slow fade. It's a fast fall, and we're not done, because what's coming next will make your jaw drop. Stick around, because this story's about to twist in ways you won't believe. Let's start with the shockwave that hit last week, April 5th, 2025. Trump's back in the White House, and he drops a tariff bomb, 10% on all U.S. imports, no exceptions. Then, April 9th, he cranks it to 104% on Chinese goods. Bloomberg's got the scoop. It's a sledgehammer aimed at China's EV empire, but here's the kicker. China doesn't flinch. April 10th, they fire back, 34% tariffs on all U.S. products. Associated Press confirms it. Markets go haywire. Dow plunges 1,700 points, Nasdaq's off 3%, and the EV sector's caught in the crossfire. Why? Because those batteries, CATLs, BYDs, they're still the backbone of our Teslas, our Fords, our GMs. Tariffs don't stop that. They just make it hurt more. Picture a Tesla Model Y rolling off the line in Texas. 40% of its battery cells from CATL. Per supply chain leaks, pre-tariff cost, $100 per kilowatt hour. Now it's $115 overnight. Tesla's margins shrink, stock dips 5% in a day, and that's just the start. Now zoom out, because this isn't just about Tesla. It's the whole U.S. auto industry reeling. Take General Motors, their Orion assembly plant in Michigan. Once a beacon of EV hope, they're bleeding $1.2 billion this quarter on EV production, per a leaked earnings memo. Why? Because those Chinese battery parts just got 104% pricier. Ford's in deeper, $36,000 lost per F-150 Lightning. Reuters dug that up, their Kentucky plants slowing. Workers clocking half shifts. And it's not just them. Rivian's down 40% on Nasdaq since January. Lucid's laying off 18% of staff, AP reported last week. These aren't hiccups, these are body blows. And China's not even breaking a sweat. They've got $3.2 trillion in reserves. Per the IMF, they can ride this tariff storm, we can't. Our reserves, $243 billion, look like pocket change, and our automakers are hooked on their supply chain like it's a lifeline. But here's where it gets wild. China's not just sitting there, they're outmaneuvering us. Picture this. A cargo ship docked in Veracruz, Mexico, April 7, 2025, unloading crates of EATL battery cells labeled Hecho and Mexico. U.S. Customs data shows a 20% spike in battery imports via Mexico since January. Why? Because the USMCA free trade deal lets them slide in tariff-free. Reuters flagged this last month. Chinese firms are rerouting through North America. Mexico's auto exports to the U.S. jumped 15% in 2024, per the Commerce Department. A chunk of that's Chinese tech, assembled south of the border. Canada's in on it too. Ontario's Stellantis plant, pumping out 200,000 vehicles a year, 20% of its batteries Chinese-sourced. Per industry insiders, they're shipping south, dodging Trump's wall. It's a loophole we can't close, and it's killing us. Let's talk numbers, because they don't lie. China's EV exports hit 5.5 million last year. Per China Customs, they're the world's top auto exporter. We shipped 1.2 million, a fraction. And our EV slice is tiny. Why? Because China's production costs are untouchable. Subsidies slash their EV prices 20 to 30%. Per a 2024 Reuters report, BYD's Seal sedan, 300-mile range, sells for $12,000 in Shanghai. Ford's F-150 Lightning, $55,000 here, and losing money. Kelley Blue Book says UCV prices averaged $55,230 last month, $7,000 more than gas cars, and climbing sales growth's flat. 8% of new cars in 2024 were EVs, same as last year. China's at 51%, per Kiam. They're not just winning, they're lapping us. And every tariff we throw boomerangs back, jacking up our costs, stalling our plans. Now picture this scene, a Walmart warehouse in Ohio. April 6, 2025, managers sweating over spreadsheets. Why? Because those tariffs just added $3 billion to their annual costs. Wall Street Journal broke it a chunk of that's EV-related. Chargers components all sourced from China. They've got no choice. U.S. alternatives don't exist at scale. Georgia's SK On plant, Michigan's LG Energy. They're years from matching KATL's 200 gigawatt hours, and they're still buying Chinese lithium per IEA. Walmart's passing it on. EV charger prices up 15% this week. Consumers feel it, you feel it, and it's not just retail. U.S. manufacturing's taking a hit. 1 million auto jobs. Per BLS, teetering as plants slow, tariffs were supposed to protect them, but they're a double-edged sword. Here's the revelation that'll stop you cold. China's not just bypassing us, they're going global. KTL's Hungary plant fires up this month, 100 gigawatt hours by 2027. Per their press release, they're eyeing Brazil, Southeast Asia, anywhere tariffs don't bite. BYD's building in Mexico, dodging U.S. duties while feeding our market. Reuters says they're planning a 500,000-unit plant there, and Europe's lapping it up. Chinese EVs hit 11% of the EU market in June, per Bloomberg. Why? Because they're cheap, reliable, and there. EU's fighting back. 37.6% provisional tariffs on Chinese EVs since July, per the European Commission. But China's countering. Anti-dumping probes on EU dairy, pork, brandy. They're playing hardball and winning. Let's get personal, because this isn't abstract. You're watching this. Maybe you're in Detroit. Maybe you're a line worker. Maybe you're just trying to buy an EV without breaking the bank. This hits you. Those tariffs, that supply chain dodge. It's why your job's at risk. Why your next car's pricier. Why the U.S. is scrambling. Albert Gore from the Zero Emission Transportation Association warned last week. Tariffs on trade partners introduce uncertainty. He's dead right. Canada's balking. 25% tariffs on U.S. autos in retaliation. Per CBC, they're not shipping south if it costs more. Mexico's shifting. $50 billion in EV parts exports to us last year. Now leaning Chinese. Our workers lose. Our wallets hurt. China's laughing. And here's the midway call to action. Don't click away. Because you need to see this through, hit that like button, share this with everyone you know. Because this isn't just a story. It's a wake-up call. We're halfway in, and the twist is coming. China's not stopping. They're rewriting the global order, and the U.S. is on the ropes. Stick around, because Part 3's gonna drop a bomb. How Canada ES oil pivot. And Europe's trade shift could finish what China started. You won't believe what's next. Picture this. A pipeline snaking through Alberta, Canada, April 7, 2025. Oil rigs humming, tankers loading, but they're not headed south to the U.S. like usual. No, they're bound for China. CBC dropped the bombshell last week. Canada's boosting oil exports to Asia. 300,000 barrels a day rerouted from U.S. refineries. Why? Because Trump's tariffs. And trade chaos made us a risky bet. China's offering cash, $70 per barrel locked in, per Reuters, while U.S. prices wobble at $65. And it's not just oil. Canada's hitting us where it hurts. 25% tariffs on U.S. autos announced April 6th, per Global News. Retaliation for our 10% blanket duties. Their Ontario plants, Stellantis, Ford, used to ship 200,000 vehicles south a year. Now they're pivoting. China's BYD sniffing around for a partnership. And here's the gut punch. Those plants run on Chinese batteries, 20% sourced via CATL. Per industry leaks, Canada's not just trading with China, they're aligning. Now shift gears, because Europe's in on this too. Imagine a port in Rotterdam, Netherlands, April 5th, 2025. Cranes unloading BYD Tang SUVs. 11% of Europe's EV market is Chinese now, per Bloomberg, up from 4% in 2022. Why? Because they're cheap, $35,000 versus a $50,000 VW ID. 4, and they're flooding in, EU slapped 37.6% tariffs on Chinese EVs last July per the European Commission, but China's countering, probes on EU dairy, pork, brandy, tit for tat, and Europe's blinking, Germany's VW, BMW, they're hooked on CATL batteries, 30% of their EV lineup, per Handelsblatt. They're lobbying to ease up. Why fight when you can trade? Canada's jumping in. Europe's opening doors, Ontario's battery plants pitching to supply VW's German lines, bypassing U.S. tariffs. Reuters says EU-Canada trade talks spiked 15% in March. It's a bloc forming, and we're not in it. Let's zoom back to the U.S., because this is where it stings. Picture Detroit, April 8, 2025. A GM factory half-lit, workers clocking out early, Orion assemblies at 50% capacity. Why? Because those Chinese battery cells, 104% tariffs now, jacked costs 15%. Per Bloomberg, GM's losing $1.2 billion this quarter. Ford's Kentucky plant, $36,000 per F-150. Lightning down the drain, Reuters confirmed, and Canada's not helping. 25% duties on our autos mean Michigan's exports are dead. 1 million auto jobs, per BLS, hanging by a thread. And here's the twist. China's not just bypassing us, they're turning our allies into their partners. Canada's oil to China, Europe's trade with Canada, it's a triangle, and we're the odd man out. Now, let's talk scale, because the numbers are brutal. China's EV exports, 5.5 million last year, per China Customs, now hitting Latin America, Southeast Asia, KATL's Hungary plant, 100 gigawatt-hours by 2027. BYD's Mexico plant, 500,000 units per Reuters. They're not slowing. U.S. EV sales, 8% of new cars, flatlined per Motor Intelligence, prices at $55,273. Per Kelley Blue Book, climbing as tariffs bite, China's at 51% adoption, $12,000 cars. They've got $3.2 trillion in reserves, per IMF. We've got $243 billion. They're playing offense. We're on our heels. And Canada's oil shift, 300,000 barrels a day, cuts our supply 10%, per EIA. Gas prices ticking up, $3.80 a gallon this week. Dodoye says it's a domino effect, and we're falling. Here's the shocker you didn't see coming. China's not just winning EVs, they're flipping the global trade board. Imagine this. A summit in Beijing. April 4, 2025. Unreported till yesterday, Xinhua leaks it. China, Canada, Mexico, hashing out an EV supply pact. Details fuzzy, but whispers say it's a $50 billion deal. Batteries from China, assembly in Mexico, oil from Canada, U.S. tariffs sidestepped via USMCA, Commerce Department's scrambling, no comment yet. But if it's real, it's a dagger. Mexico's auto exports to us, $50 billion last year, could double. Chinese parts flooding in, Canada's oil fueling it, and we're stuck. Our $369 billion Inflation Reduction Act. Gutted by Trump's team, AP says emissions rules are next. We're betting on gas while the world goes electric. Picture the fallout. A Tesla gigafactory in Texas, April 8, 2025. Production slowing, 40% of batteries Chinese. Now pricier, stocks off 5%. Walmart's shelves, EV chargers up 15%. $3 billion in tariff costs, WSJ reports. Consumers balking. U.S. manufacturing, 1 million jobs, teetering as Canada pivots, Europe aligns, China dominates. It's not just EVs, it's power. The U.S. as trade kingpin, that's fading. China's reserves, their scale, their moves, they're not waiting, they're winning. And here's the insight that'll haunt you. This isn't a fluke, it's 15 years of planning. $230 billion in subsidies. Per Carbon Brief, versus our bickering, they've got 300,000 battery workers, we've got 50,000, they've got the world, we've got tariffs. So where does this leave us, April 8, 2025? The U.S. isn't just losing the EV race, we're losing the board. Canada's oil to China, Europe's trade with Canada, Mexico's factories for China, it's a new order, and we're on the outside. Gas prices up, EV prices up, jobs at risk, China's not slowing, 51% adoption versus our 8%, $12,000 cars versus $55,000. They're not just bypassing. They're outpacing, outsmarting, and outlasting. Here's the bold claim. This could be the end of U.S. trade dominance, not in a decade, but now. And the question for you, yes, you watching this, what happens when the world doesn't need us anymore? When China's EVs, Canada's oil, Europe's markets run the show, is this the final blow, or can we claw back? Drop your thoughts because this isn't over, it's just starting.